Hey traders, Steven here with thetradersplan.com. It is Wednesday, April the 1st. The days go by. I've been going by slow, but the year has been going by quick. I want to take a look at the market. Yesterday something happened and I think we kind of changed the tone a little bit, so I want to talk about that. I'm going to dive right in to the Nasdaq because this is an interesting chart, and if you've been watching my videos, you know that I've been talking about the 5-day, ride the 5-day, which is the pink line. As long as we're above the 5-day, I think we're okay to rally. And once we go above the 20-day, that can kind of be your new stop. So, you're good if the market is above the 5-day. And then, if the market closes below the 5-day, which is looking like it's gapping down this morning, then the situation changes completely. And the Nasdaq tried to make a definitive close above the 20-day moving average, which would have been nice yesterday, right? That could have opened us up for kind of higher prices, or at least a rally kind of into this area. And it just didn't happen. There was a reversal kind of midday, 1 o'clock, and then the market sold off. And now the market is gapping below the 5-day moving average. So, I've always talked about, being the house, right? You want to have a slight edge. You want to trade with a slight edge in the overall market, just like the casinos do. The casino, only has a 1 to 2% edge, 52% edge in the game of blackjack, right? So, but because they play so many hands, over time they can make a lot of money with blackjack. Now, they're the house. In this situation, for you to be the house, you need to be in an uptrend, right? That gives you just a slight edge, right? You can invest with the trend. And if all of a sudden the trend is not going up, right, all of a sudden we break the 5-day, that opens us up to come all the way down here. You are not the house anymore. So, I would really, yesterday, I had some positions. I started to raise stops. I closed out a couple of weaker positions that just weren't showing a lot of strength. And today, there's follow through on the reversal. So unless the market just bullishly reverses today on Wednesday, I think it's really time on any new positions that you took within here. I think it's time to raise the stops and be cautious, because if we don't have a strong reversal today, let's say where the market falls below the 5-day moving average and then comes back and bullishly reverses, if that doesn't happen, I probably wouldn't take any new positions this week. I would definitely raise your stops and just kind of be careful, because there's two things that can happen. If the market gaps below the 5-day moving average, well, then we have to kind of follow that to the downside, right? So it could kind of come down and retest this low, which in my opinion would be just fine, as long as it's kind of a trend, right? They're easier to stay out of. What is worse, in my opinion, is if the market goes down 2 days, then comes back 2 days, sucks you back in, goes down 2 days, and then just really goes into kind of a bottoming pattern. Those are extremely difficult. They suck you in. They whipsaw you around. I would rather just come down, do a reversal, and come back up, but we don't always get what we want. So kind of the point is, since the market is gapping below the 5-day moving average, just like I've been talking about this line, it is time to take precaution. In my opinion, this rally could be over. Now, if we look at the 60-minute chart on the Nasdaq, and I don't always pay attention to this, but kind of look at where we hit, right? You got a little double bottom on the 60-minute chart, but we really hit the top yesterday, top of this bar, the 78.16, kind of hit, what was support becomes resistance, right? So hit it 1, 2, 3. Again, I'm not making a prediction. I'm not saying it's going to keep coming all the way down here. What I'm saying is you have to look at the chart, and the chart's telling you right now, based on what's going on this morning, especially with the different tone that the president has taken, you need to be incredibly cautious, right? And, I believe there will be light at the end of the tunnel. I don't know how long it's going to take, maybe 30 days. But I do know this, the markets always bottom before the recession is over. They usually just bottom the minute we can see light at the end of the tunnel. So just kind of keep that in mind, and don't have too negative of an outlook for the rest of the year, because you're going to miss some rallies. Now, if we look at, oops, that's not what I meant to do. Meant to look at some industry ETFs real quick, just to see what was up yesterday. MLP, there was some junk buying, right? Oil dipped below $20 a barrel, which is absolutely wild. It either did that Monday night or Sunday night. Just briefly dipped below $20 a barrel. You have MLPs that transfer oil and gas. This has a dividend yield of 22%. You can see on the daily chart, it's looking like it wanted to bottom, but I don't know. This is just, this industry is looking incredibly weak. And if you buy this, something like this, that's fine, but you better have a tight stop, like at the low of this week. If it rolls back over, you get out of the way. So it looked like yesterday the only thing that was up was all commodity related stuff that's really been beaten up. And if we look at what was down the most yesterday, and this is what I do every day, I say, okay, what's up the most, what's down the most, and that gives me a nice snapshot of what I'm looking at, what kind of market we could potentially be in. Yesterday, home construction was down the most. This just looks like a snapback. This broke its 5-day moving average yesterday, and you can see that looks like it's ready to come back down. So I'd be incredibly cautious there. Utilities were actually down quite a bit yesterday. Gold miners. So, it's funny because, man, gold has really been all over the place. And I think you think it would be a safe haven, but money's also been flowing into the dollar a little bit. You can look at the UUP to see that. It had a surge. Money was flowing into the dollar, and now it's pulling back. So I don't know which way gold is going. It kind of looks ugly, so I'm just going to get out of the way for the time being. But you can see right here, financials, everything was down yesterday, and the only thing that was up was commodities. Now, if we look at, that's not the list I want to go to. If we look at a few stocks that did hold up yesterday, LVGO held up yesterday. After a nice surge on Monday, busting through that 50-day moving average, above average volume, and then yesterday kind of held that level. I'm going to show you some stocks, but I don't think it's safe to buy stocks right today or even tomorrow, unless we just get a reversal today. So, but I'm just going to show you what stocks on my list of stocks I think that will fundamentally, when I say fundamentally, I mean sales, earnings, fundamentally hold up, kind of stay-at-home stocks during this time. You can see DocuSign, really you can see a little cup of handle, had a nice follow through yesterday. This is looking like it's trying to break out, but at the end of the day, the market could just suck it back. But, these are the stocks you probably want to look at, when the market decides to bottom or take a pause or whatever the case is. This stock, SDGR, tried to break out yesterday, but you can see it try to clear this pivot right here of a lopsided cup with handle. Nice volume right there, but it sold off, still ended positive, right? But it kind of sold off. So, Nintendo busted through the 200-day moving average, and Nintendo is pretty impressive because it is knocking out every resistance, in my opinion. Now, I don't like this V shape right here. That's not I'd more kind of wait for it to pop and then kind of create a flag, but it's already above the 20, the 50, and the 200 when the market just got rejected at the 20. So this is showing a lot of relative strength right here, maybe because parents are probably buying more, stuff to stay at home with their kids. Amazon was, reversed yesterday, so we'll kind of see. I really expect this to kind of float backwards. I'm hoping it holds up. I was looking at cannabis stocks, and I'm not anymore because yesterday, because they're, it broke above the 20-day moving average yesterday. Could just be a short squeeze, but then it kind of looked a little bull flag midday, but by the end of the day, it broke the 5-day moving average. So I would expect probably lower prices, but I'm kind of keeping an eye on this because, this looks interesting. I do think if we get a different party in the Oval Office, I think that these will run. Cloudflare, it was up really nice, 8% at one time yesterday. We bought this on Monday, somewhere around here. Already sold half at 8%, raised the stop to break even. So right now we have our stop at break even. So if this pulls back, we can at least net a 4% gain on the trade. So this is a stock I really, really like, but it reversed in an ugly way yesterday. And I just, it goes just to show you that, the market. Peloton punched through the 50-day moving average and then kind of closed below it. So I would wait this to play out. I'm kind of blowing through here because I don't want to spend too much time. Domino's is one stock that, gapped up on earnings, came back, filled the gap, bounced, supported the 200-day, bounced, and then sold off yesterday. This probably needs to consolidate a little bit. Like, again, I'm not in with the V's. I bet if this pulls back a little bit, watch the relative strength line, because if the market starts to sell off and the relative strength line is holding up, Domino's is hiring. Fundamentally, they are holding up well. Should be good. But again, I think if the key takeaway of this is to, if the market's gapping down below the 5-day moving average, there's a long way to go to test the bottom. And nothing good is going to happen under the 5-day moving average. So you might as well just be patient and be careful.